Okay, so good morning, everyone. Welcome to the new week. This is the macro snapshot, recording this in the morning of Monday, January the 20th, 2025. Today, of course, is the inauguration of the new administration, President Trump. We saw last night that and over the weekend, that he and his wife, Melania, issued some meme coins, some crypto coins. So BTC up today, people in the crypto space are pretty bullish about that. The interesting thing as well today is that Trump, the markets are kind of more or less closed for Martin Luther King Day as well, and of course the inauguration. Trump has signaled that he will be releasing fairly quickly, possibly today, tonight, this afternoon, tomorrow, a bunch of executive orders, which are orders which the president has the authority to issue without official ratification from Congress. Some people are saying there are going to be dozens of these, maybe even up to 100 in the energy space, immigration, potentially something on on tariffs. And of course, really what the market is trying to figure out when the market opens tonight, at least the futures, and then tomorrow for the cash equity and bond markets, is just because a lot of it's priced in. So let's just have a quick look and see what's going on a little bit just before we get onto that. So we saw last week, let's just take as an example here the 30-year yield. So this is a daily chart on the 30-year yield. And we can see that, the yields, once they hit 5%, there was quite a lot of resistance there. And obviously some real money buyers came in. And also that's probably, apart from the fact that it went up to 5%, is the fact that last week we had, sort of slightly softer than expected CPI and PPI readings. And so the inflation, the market liked that sort of slightly softer inflation metrics. But when you actually pull back and look at the inflation situation, which we did last week, I showed you a couple of graphs. If you look at, core PCE or CPI or PPI, these kind of things, inflation has come down a lot. But the reality is that depending on the metric, it's still, significantly above the Fed's self-professed target of 2%. So, it's anywhere between about 3.54, 2.8%. It's still got quite a long way to go. And we saw last week there was one of the Fed members, Beth, I've forgotten her surname, basically saying that, she doesn't agree with more rate cuts and then inflation is sticky and there's still a lot more work to do. So I think what we can take away, the big picture before we get on to Trump, is that inflation has stabilized. It's not necessarily ripping higher, but it's certainly not coming down quickly towards the Fed's target. And the Fed, I think, would be quite comfortable not cutting at least for several months, if not, 6 months or something like that. We'll see. That's going to depend on the data and Trump's policies and whatnot. The second thing I would say is that the real economy seems to be strong. If you look at the employment situation we saw last week, for example, initial jobless claims, very, very strong. The employment situation is strong. We see that growth is strong. We saw that retail sales is pretty solid. So there's absolutely nothing at this point, despite the fact that people are constantly calling for recessions, there's nothing in the real data to tell us that the real economy is falling. And then allied to that, we have potentially less regulation from Trump. We have continued fiscal spending. There's a good possibility that the real economy in the US it continues to be to motor along. The real question is going to be whether his immigration policies, maybe to deport a significant quantity of illegal immigrants, is going to cause, and his tariff policy is going to cause higher interest rates. The other thing which is very important is at what point do these higher yields, when and if will they affect stocks? At what point does the equity risk premium just start to go down? Because people start, like when I say people, I mean real asset allocators start to look at bonds as a reasonable alternative. If you're getting sort of 5%, you're getting real yields at maybe 2.5% or so. And I think this is an interesting way to look at this. And I think very important is what Scott Bessent is going to do at the quarterly refunding announcement. Because if we actually go back and look here at what happened, Janet Yellen, who's the outgoing Treasury of the Secretary. So I want you guys to look back here, basically at the beginning of November 2023. And you can see that's the last time that the 30-year yield was up, above the 5% level. And what you guys can observe here is this very dramatic fall from about 5% down to, just under 4% here, which took place in about 6 weeks or so. And that was a direct consequence that at the QRA, the quarterly refunding announcement, which is not only how many bonds the US will sell, but it's also the composition and the mix. And what happened here, or there, I should say, in November of 23 is that Janet Yellen did sort of kind of a twist whereby she basically decided to issue less long-term bonds and front load everything on much shorter bills. And basically the long end of the market are like that because there was less long end issuance and the yields came down. Now, what you can see here is that, essentially since then we've come down and gone back up. Okay, we've seen that. Now we have Scott Bessent, the new, most probably Treasury Secretary coming in. His first QRA quarterly refunding announcement is going to be at the end of this month. I forget the exact date, but it's like, I think January the 31st or February the 1st. And at that point, what's going to be very, very interesting, he's on record of saying that, the US should term out the issuance, so should start to go back to a more traditional or regular sort of balance of short-term bills and longer-term bonds. And there's a possibility that he'll do a reverse twist again and basically start to issue a lot more longer-term bonds. If that's the case, we could get a pretty dramatic move upwards in the yields. I'm not saying we're going to get 120 basis points like we had here, but we could something going up to, definitely to retest up to these highs, 5.1, 5.2. And if you look even at a longer time frame, let's say, for example, on a weekly chart, for sure we could test up here and maybe even a little bit higher. You can see that, there's other good levels up here, maybe even 5.5 or so. So the point is that I think is going to be pretty critical. And what I would say is that, in a certain sense, a lot of the Trump tariffs and the immigration policies and sort of expansionary policies and fiscal largesse kind of policies, they're going to be, they're relatively well priced in, because we could see here, for example, if we look at the 30-year, we can see that yield has gone up a lot. And of course, that's also to do with the real economy, but part of that's going to be pricing in Trump. We can also see that, the US dollar has strengthened a lot. So it seems to me that, really what we have to see is what happens today with Trump. There's three kind of possibilities. I'll look at it again in greater detail once he sort of releases, he has his inauguration speech, which I believe is at midday. And then, of course, we're going to have to wait and see if we start getting executive orders. But basically, there could be anything from not a lot of news and maybe graduated tariffs, maybe starting with 0 and then doing 2%. And ramping it up to 5% every month. There's that. There's also the possibility, the extreme would be that he does a universal tariff of, I don't know, let's say 20% on Canada, Eurozone, China, or maybe he does, let's say, a 10% universal with sort of targeted industries, or maybe. So the thing is, there are a lot of combinations which are going to be possible. And I think the market, unless there's an extreme one, which I would say the most extreme would be a universal tariff of 20% with maybe 25% on China or something. But I think in general, that we're going to have to see what happens. And I say that a lot of things are actually sort of priced in. So what is interesting as well, just while we're looking at the bonds, is also to think in terms of what's going to outperform or underperform. And I always like to look at the pretty simple thing here is, let's say, the SPY divided by the TLTs. And what you guys can see here is that the general stock market, so the SPY, that has essentially outperformed the long-term bonds in the shape of the TLT ETF for many, many months, if not years, going all the way back. So what we're now starting to see is a little bit of consolidation. But the point is that this chart is not looking particularly bearish. And if we see that, for example, Scott Bessent decides not to do a reverse twist and decides not to sort of backload or put a lot more bond issuance at the back end of the curve, we could see here, allied with Trump's other sort of pro-growth policies, we could see some outperformance here of the SPY TLT, and that could break higher. If we also look at something like another metric which I like to look at is ITOT over government, which is the totality of stocks versus the broad index of government bonds. You could also see here that has been consolidating and kind of grinding sideways for for 2 or 3 weeks. But that too is primed potentially to break out. But the point is here is that I think we need to see what happens, obviously, with Trump's sort of policy announcements in the next couple of days and weeks. And then I think the key thing is also going to be the QRA at the end of the month, because if the bond market feels that Scott Bessent is not overly issuing too many long-term bonds, I think that could be another sort of catalyst for an up move here in the equities. I think the equities maybe have another 3, 4, 5% to go on the upside, certainly to outperform bonds. And I'm not saying that bonds will collapse, but I think bonds maybe will sort of meander around and remain stable. Whereas I think the equities could definitely outperform. Okay, so let's just get back to a couple of other things. And I'm not going to talk too long this morning because, as I say, the markets are more or less closed, and we have Trump's inauguration and everything. Just quickly, let's have a look at the dollar index. We know, again, the dollar is something which has run up a lot over the last, well, you can see here, basically since the 1st of October. It's come up a lot, breaking out even a little bit today as we speak, pretty strong. And that's absolutely logical, just because we have sticky inflation in the US. We have a Fed which has been repriced to be a little less dovish. So as you guys know, the Fed cut 100 basis points and seems to be on hold now for an extended period of who knows, at least, let's say, a quarter, something like that. And of course, we've had a strong US economy. So that's very sort of logical. There's nothing strange about the dollar strength here. We also have had weakness in China, weakness in the Eurozone. And so the question now is, though, is part of this, a pricing in of sort of the Trump policy. And I believe you have to say that probably some of it is priced in. The dollar is extremely, from a positioning point of view, is extremely stretched long. It's very, very long. However, we know that long positioning can always go on for a little bit more. We're going to have to see what Trump has to say today. But definitely, I would say if there's a potential here for some kind of pullback, if, let's say, the announcements on immigration and specifically on tariffs are not particularly aggressive or dollar favorable today or over the next few days, I think the dollar could definitely come back to, maybe something like the 108 level you see here. This is a pretty good level here, 108. Again, I don't think the dollar is going to collapse. I'm just saying that it could come back, a reasonable little pullback of what's that, about 1% or 1.5% or so. I think at that point, that becomes a more attractive entry level for long dollars. In order for it to really rip a lot higher, I think we're going to have to get sort of the big bazooka from Trump, as I say, some form of, extremely aggressive, universal, unilateral tariffs, and, China maybe being hit with 20 or 25% across the board tariffs rather than very targeted, graduated tariffs. The other thing which is interesting, of course, let's look at the Euro index, which is a basket of currencies. Again, similar thing, no surprises there. We know that the Euro index has gone down a lot. And what's interesting, if you look on a slightly longer time frame, by the way, this is a daily chart. You can see here that going all the way back from late September 22, basically we're at the 61.8 fib retracement, having a little bit of a pause. Everyone's been very bearish on the euro. So can this go down a little bit more and down to parity? Although again, this is the euro index, not the euro USD. So there are a couple of other currencies in there, like such as the yen and whatnot. But the question here is, I think. If we do see a bit of a pullback in the US dollar, I mean, it's quite possible. I think a more attractive entry point would be maybe 104.60, something like that. You can see up here, this level here is quite interesting, which is around about 104.50, 104.60. And I think at that point there, that becomes an interesting level because either, it could be more downside if Trump, decides to implement his putative trade policy. On the other hand, if we start to see that, it's going to be a bit more gradual, a little bit more subtle, and we start to see some kind of signs of sort of strength come out of Europe, or just at least recovery. Everyone is so long the US dollar that we could see quite a nasty short squeeze. We could see, if it gets up to there, we could see it even going all the way back up to 108 or 109. So this is going to be an interesting one to look out for. I mean, other currencies to keep an eye out for, obviously the Chinese renminbi. This is the Hong Kong, the offshore one. We see the US dollar is coming down as we speak today, just in the cash market here. Again, going to be very interesting if Trump does put on aggressive tariffs, whether the Chinese will let this weaken over, the 7.5 level, let it weaken upwards. That's a tricky one, because you could say that actually the renminbi has weakened significantly. We're talking almost 6% here in the last 3 months. So the point is that for all of Trump's bluster about, punishing the Chinese and their large trade surplus, the reality is that slowly, the Chinese authorities have allowed the yuan or the renminbi to weaken almost 6%. And so that's going to lessen potentially the impacts on the US consumer of sort of imposed tariffs. Now, of course, if Trump is aggressive, it could be that the Chinese authorities, it's a very big level here at about 7.35, as you guys can see here. Maybe they'll let it just sort of slightly weaken. This is a triple top here. If it does weaken, maybe we can go a little bit further. But on the other hand, the Chinese are also, their longer term plan is to in some sense, try and be an alternative to the US dollar as a global reserve currency. And so they want to keep the renminbi not really trading as a kind of a banana republic, so to speak, but as a sort of a stable global currency, not purely at the whim of the US dollar. And so they may want to, sort of slightly artificially, so to speak, let it weaken a little bit, but not get out of control and kind of plummet up to sort of 8 or 9 or something like that. So it's going to be very fascinating to look at that. The other thing as well is that we have the Bank of Japan decision later this week. Now, obviously, what's happening in the US with Trump is probably going to trump that, and because there's not too much data in the US either. I should add we have some significant earnings in the equity space starting from tomorrow. We have Netflix and whatnot, but interesting to see what happened to the Bank of Japan. And as you guys can see here, the US dollar has weakened a little bit. There've been a lot of leaks coming out of the Japanese press over the last kind of 4 or 5 days, and getting to the point where Ueda has leaked a few things, and other members have leaked a few things. And if we look at what's priced in, we can see now that we've got 21.5 basis points, so almost an 85% chance of a hike is now priced in of 25 basis points. So that won't come as too much of a surprise. If anything, if they don't hike, that would be a slight surprise. And again, it's going to depend a little bit on the Trump's tariffs. Just finally, guys, just want to look at the equities. Again, we know that Trump loves the stock market, and we know that he sort of measures in a certain sense his success by where the stock market is. If we look at some of the cash indexes, so let's look at just the SPY, still looking quite strong. I mean, the reality is, it's had a little bit of sideways action, but from a longer term perspective, you can see here on the dailies that it was being pretty much supported at the 100-day moving exponential moving average here. We're very, very far away from testing the 200, and you see that as soon as it went down just a little bit, there's not even much of a fib retracement here. We can have a quick look. You can see here, even if we go from this one going up to August, we didn't even get down to a 38.1% fib retracement, and as soon as we hit the 100, there was quite a lot of support. One could also argue technically that this is sort of some kind of sort of bull flagging for sort of formation. So there's nothing to indicate really here any major breakdown. And what I would say, if we look at, let's say, the NDX, and I'm going to look at NASDAQ just because we know that, the MAG 6, the top 6 or 7 market caps is obviously pushing the broader index. So we need to look at that. Again, that looks like even a slightly clearer sort of bull flag kind of situation here. Again, off the 100-day moving average and this pretty key level of 20,600. That's absolutely key because it's a horizontal support and also a pretty important sort of moving average here. And I would have to say that until and unless we can break that level, and again, about 20,600 on the cash NDX, NASDAQ is looking strong. And if NASDAQ remains strong, those mega caps will continue to keep the SPX up. So that looks fairly strong. So the only real question I'm trying to think here is that we can presume that Trump is going to try and communicate in the next day or 2 or 3 or 4 or 5 or a week or so, some pro-growth strategies, deregulation strategies. He's also, I saw this morning, talking about sort of an emergency energy fund to try and pump cheap oil and all this kind of thing. So that might not be so good for energy producers. But the basic thing here is that I think we need to get a bit more clarity about bond yields. If bond yields are going to go up significantly because maybe there's going to be some kind of twist from the QRA in a couple of weeks, that could be the catalyst to put pressure, downward pressure on the equities. On the other hand, if Scott Bessent says, "Hey, I've only been in the job for a week or two. I don't want to rock the bond market too much," and maybe continues more or less with Yellen's treasury issuance. So that means not too much on the long end and front loading a lot more on the front end of the curve. That could be the green light for equities to really, maybe to push higher for another few percent, sometime, let's say, sort of, let's call it like sort of February, March kind of period. And again, just in terms of levels, I think on the SPX, what's pretty important here is the 5860 level, which I've marked here. It's sort of this horizontal level here. And if we keep on going up, that's going to correspond, relatively closely to the 100 EMA, and maybe even it's close to yeah, you see, we're getting down there to the 100 simple moving average as well. So that's going to be a key point. Okay, guys, I might leave it there because, as I say, I'm going to wait and see what Mr. Trump has to say for his inauguration. So I'll be monitoring that today and looking at any executive orders. And if I feel there's anything I need to communicate, I shall possibly even put out a quick video later on today. Thank you. I hope that's useful, and enjoy the semi-market holiday. Thank you.